If you're a real estate investor, one of the most common questions that inevitably pops up is this: should I move my rental property into an LLC? It's a fair question, and the answer isn't as simple as a blanket yes or no. There are good reasons to consider it, but there are also real downsides that need to be carefully weighed. At its core, the appeal for transferring your rental into an LLC lies in protection. An LLC, short for Limited Liability Company, creates a legal barrier between your personal assets and the business. Let's say you own a rental property and something unfortunate happens. A tenant slips on the icy steps outside and suffers an injury and decides to sue you. If that property is owned under your name, everything you own, like your house, your savings, your car, your investments, can potentially be at risk. An LLC changes that dynamic. The lawsuit is usually limited to the LLC itself, and only the assets owned by the LLC are in danger. For many investors, that peace of mind alone is worth the effort to set one up. After all, accidents can and accidents do happen, and the last thing you want is to jeopardize your family's financial security over a single unexpected event. In short, LLCs help isolate risk. Beyond liability protection, LLCs offer other advantages as well, and for starters, they give your real estate investments a level of professionalism. An LLC creates a clear line between you as a person and you as a business owner. You start running your real estate empire as a business instead of a side gig. When you're collecting rent, managing expenses, and handling repairs, you're not doing them as Lisa Smith. You're doing them as Smith Rentals LLC. That all sounds great, but before you start transferring everything into an LLC, there are some important downsides that you need to understand. The first and the biggest hurdle is your mortgage. If the rental property has a mortgage on it, transferring ownership to an LLC can trigger something called a due on sale clause. This clause allows your lender to demand full repayment of the loan immediately. Now, does this always happen? No. In most cases, lenders don't care as long as they're getting their mortgage payments on time. Most lenders are unlikely to enforce it. I have honestly never seen this being enforced, but it's a risk that's real enough to warrant careful consideration. If you're buying a new property, it's far easier to set up an LLC and purchase the property under its name from the get-go. That way you avoid the due on sale clause entirely. But if you already own the rental and it's in your personal name, you want to make sure you communicate with the lender and get their okay before you proceed with the transfer. Then LLCs aren't free to set up or maintain. Depending on your state, you will have to pay a filing fee, annual renewal fee, and potentially higher tax preparation costs as well. Then there's the administrative side. These costs can vary depending on where you live. For instance, in California, there's a minimum annual franchise fee of $800 for each LLC, which might make it less appealing for landlords with only one or two properties. On the other hand, states like Wyoming or Delaware are known for their landlord-friendly laws, attracting investors nationwide. Knowing your state's specific rules can help you decide whether this move makes financial sense. Then you also have to be careful with your bank accounts. For an LLC to protect you, it has to act as a separate legal entity. This means opening a dedicated bank account for your rental income and expenses, keeping detailed records, and never mixing personal and business finances. If you accidentally use your LLC bank account to pay for a personal expense, you could pierce the corporate veil, meaning the court might decide that your LLC isn't truly separate from you. That could render the liability protection of your LLC meaningless. For investors who aren't careful about these details, added complexity of managing an LLC can make it feel like more trouble than it's worth. So when does it make sense to move your rental into an LLC? If you own multiple properties, it's hard to argue against the benefits. The more properties you own, the greater your exposure to risk. In this case, using an LLC to separate your investments and isolate liability can make a huge difference if something does go wrong. If you're investing in short-term rentals like Airbnbs or vacation homes, the liability risk can be even higher, making the case for LLC even stronger. If you manage your properties in states that have tenant-friendly laws, the added liability protection of an LLC can be even more critical. States like New York and California California often see landlords navigating complex tenant disputes. Having an LLC ensures that you're not just protected, but also positioned to resolve these conflicts more professionally. And if you're partnering with others to invest in real estate, an LLC is practically a necessity. It simplifies ownership, provides a clear legal protection, and avoid potential headaches that come with informal partnerships. These are some good reasons why you should form an LLC. But what if you live in a state like California where the franchise fee is $800 and you only have one rental? You're not willing to open an LLC because of the cost, but you also want to protect yourself against lawsuits. What do you do then? Simple. You have to make sure that whether you have sufficient protection through your insurance. A robust landlord insurance policy paired with an umbrella policy can often provide millions of dollars in liability coverage for a fraction of the cost of forming and maintaining an LLC. For small investors with one or two properties, this approach can be simpler and far more cost effective, especially using the umbrella policy the right way. You can often secure an extra $1 million or more in liability coverage. This makes it an excellent safety net for landlords who want added protection without dealing with the administrative burden of an LLC. Second, umbrella policies go beyond your landlord insurance. They provide coverage for incidents that go above and beyond the limit of your primary insurance policies. For example, if a tenant sues you for damages and your landlord policy only covers up to $300,000, the umbrella policy can step in and cover the amount beyond that limit. Also, umbrella policies are simple to maintain. There's no additional paperwork and no separate bank accounts are needed. And there's also no risk of piercing the corporate veil. You keep your current insurance and the umbrella policy acts as an additional layer of protection on top of it. So pairing a robust landlord policy with an umbrella policy, you may find that you're adequately protected without the need for an LLC. If you do decide that an LLC is the right move, you will want to do it the right way. Start by forming an LLC with your state, which usually involves filing some paperwork and paying a fee. Then transfer the property to an LLC by filing a new deed with your local county recorder's office. If you have a mortgage, make sure you talk to your lender first and don't go into this blindsided. You will also want to update your insurance policy to reflect the LLC as the new owner of the property. Some insurers might require you to switch to a commercial policy, so be prepared for potential increase in premiums. Finally, a dedicated business bank account for the LLC is needed to use it exclusively for rental income and expenses. Keeping your business finances separate is critical for maintaining the LLC's liability protection. I was recently reading about an incident where a small landlord faced legal action after the tenant was injured due to poor property maintenance. The tenant fell through a set of rotting stairs at a rental property, resulting in a fractured ankle. Despite multiple requests for repairs, the landlord's neglect ultimately led to this unfortunate situation. And while this is clearly an extreme case where the landlord was at fault, obviously, what I'm trying to say is that these lawsuits are more common than people realize. I will end with this. At the end of the day, moving your rental properties into an LLC isn't the right choice for everyone, but it is a powerful tool for many investors. If you own multiple properties, manage short-term rentals, or partner with others, an LLC can provide critical protection and structured investments. But if you're a small landlord with just one or two properties, a solid insurance coverage with an umbrella policy might be all that you need. The key is to weigh the risks and benefits based on your unique situation. Talk to a qualified attorney or a tax professional to make sure that you're making the best decision for your portfolio. Thank you for watching, and I'll see you next time.